Hi, I'm Lee Stone, and this is your MaxiForex Week in Review. Today we will cover some of the major financial events of the past week and discuss how they impact the global currency markets. But before we cover headlines of the week, let's look at last week's risers and fallers. The euro had a fairly mixed week versus the dollar, but fell only 0.25% on the week. The pair was last trading at 131.84. The British pound had shown some signs of life in the previous 2 weeks. This week, the GBP was grounded. The pound slid 1.75% against the dollar and closed Friday trading at 156.30. The dollar and the yen traded mostly mixed throughout the week, so much so that the pair finished the week virtually unchanged. The pair was last trading at 83.94. Reversing earlier losses in the week, the US dollar managed to edge its Canadian counterpart by 0.34% for the week. The USD CAD closed Friday at 101.27. Oil traded back and forth throughout the week, resulting in minimal gains. February crude oil futures were last trading at $88.60 a barrel, a gain of only 0.2% for the week. As might be expected, gold also experienced a mixed week of trading. Gold finished the week at $1,374 per ounce, a loss of 0.65%. The news this week revolved almost entirely around the euro. Though there was some hope that the sovereign debt crisis from earlier this year had been resolved, the clear reality is that it wasn't. Now, as we enter the final weeks of 2010, the European Union is finding it difficult to convince investors that the problem has been contained. Meanwhile, the US dollar has been making steady gains over the past month or so and is not showing any signs of slowing down. Here to discuss this with me today is analyst Martin Smith. Hello, Martin.
Hello, Lee.
So, Martin, could you give us a quick overview then of the situation in Europe?
Sure. Unfortunately, it's starting to parallel the situation we had earlier this year when Moody's downgraded Spain. The Investors Service downgraded Ireland's credit rating and announced that they might be downgrading Spain once again and Greece's ratings as well. Now, when Moody's downgraded Ireland, they dropped the rating 5 notches, which is a clear sign of serious concerns. European Union leaders have been meeting throughout the week to discuss the current state of affairs, and though they have managed to agree on some issues related to a permanent debt crisis mechanism, these actions aren't set to be implemented until 2013. So, though this is a good step in the right direction, it still leaves the current crisis unresolved and investor fears mounting.
Okay, so what's happening then with the dollar?
The dollar's performing well. Treasury yields are at a 7-month high. Retail sales are up, as are producer prices and industrial production. Yields on the 10-year Treasury bond, Treasury note, are at 3.5%, and the 30-year bond is at 4.6%. Higher interest rates for a country generally means a stronger currency, and it appears that as the bond market continues to flourish, the dollar will continue to strengthen. The big contributor here, though, is the drop in the euro and the economic concerns that are dominating financial news out of the region. Risk appetite that had existed 2 months ago is quickly fading away again. For example, the Canadian dollar, this fell for a second week as investors moved toward safer assets. So if Moody's makes any further downgrades in the Eurozone, and if positive news continues to come out of the US, expect the greenback to continue strengthening and for risk-related currencies to further decline.
Okay. Our Ask the Broker question of the week comes to us from Paul Emsfield of Leeds, UK. He writes, I understand the relation of risk aversion to the US dollar, but why is the dollar outperforming the yen?
Well, it's not really outperforming the yen. As you mentioned earlier, Lee, the dollar-yen pair ended the week almost unchanged. Now, you'd expect to see investors moving towards the yen as well as the dollar, or even the yen more than the dollar. But this is also a very tricky pair to determine. There was a decline among Asian currencies this week, so one thing to look for is early week performances. Now, another situation that should be closely monitored is in the Korean peninsula, where there's a real threat of escalation. Because of Japan's proximity to the region, they could possibly be dragged into any conflict that might occur. The speculation alone might affect the yen this week, so be careful when trading currency pairs related to it.
Thank you very much, Martin. Unfortunately, that is all the time we have this week. We hope you enjoyed our weekly review, and we hope you will join us next week. Until next time, be sure to visit us at MaxiForex.ru.